afternoon, everybody. Welcome to the Trader Merlin Show. It is your Monday edition, a wild one. A wild Monday. Actually, honestly, Sunday night was great for me. I was doing quite a bit of trading on Sunday night with that big gap down and really almost 5.44% slide in the S&P to start things off. It was one of those ones, if you saw the tweets last night, I was looking at it thinking, uh-oh, Jim Cramer can't be right. I don't want Jim Cramer to be right. Of all the times to have Jim Cramer be right, I was like, not today. No. Because remember, guys, Jim Cramer said we're going to have a Black Monday like our 1987 crash. We're going to see massive declines. What was the 4,400 or 4,000 on the S&P was his target. It's like, oh, man. And going in, as soon as those markets open Sunday night, I will share that with you for some of you who may not have watched the futures when they opened up. Oh, we have so much to talk about today. Hello, everybody. Sorry, I'm just jumping right into it and going here. Let me put this on a 5-minute time frame so you can see where we opened up. There's your Sunday night open. And you can see that right away we fell aggressively. And at one point, I'll go from the close there to where we were. At one point, you're looking, there was 5.17% there. It was actually more. So 5.44 was the ultimate down point. But just really bad. And I was like, oh no. The circuit breaker, I believe, for after hours is 7%. And I was actually waiting for us to get down to that 7%, but I kept playing bounces with just small contract size, just one contract at a time, because I don't like the illiquidity of Sunday night trading. Ended up being just a couple of really, really good trades. You know, when you're pulling 40 points out of an S&P contract, you guys all know that that's some pretty good gains in there, and there were those swings were happening in that after our session. So yeah, last night was great, and then of course this morning came. I did make some new position allotments. I will tell you guys there in just a sec. We'll look at that. Yep, not bad per contract, right, Steven? We'll take it all day long. $50 a point, call up 40 points here. I mean, just like, and they were happening really fast. These moves were not small, you know, taking hour after hour to happen. It was pretty quick going on. Merlin, buying beers? Sure, I'm happy to buy beer. I don't mind buying beers. Unfortunately, you all live in different parts of the world, and some of you don't drink, so I'll buy you an orange juice. But yeah, I don't mind buying people beers. I mean, I already owe Big Eb a couple. What I should do is I should just parlay and have Bill Addis pay Big Eb just because, you know, Bill's been losing bets to me left and right. But anyway, let's dive a little bit deeper into what went on. So again, that was that panic point. And if you look at where I have the chart there, okay, and kind of where we came from, obviously you guys can see a lot of pain. There was a ton of pain. Or really from the peak we had here back from Wednesday to our low point, that's a 15% slide in the S&P in just a couple of days. That is really bad. And in my opinion, you guys know my opinion, I'm one of those people that I like to think contrarian, which has gotten me into trouble many times before. But also, I like when I see people freaking out. I like when everyone's panicking. And to me, last night, Sunday night, when it opened up, that was panic moment. I mean, you could just see the fear when we gapped down like this, how bad it was. And then remember, other markets are already open before ours. So we could dive there in our conversation here about risk on and look at international markets. So let me bring up a fun little graphic here for emerging markets. You thought our market was bad on Friday. Emerging markets were worse. Not even emerging markets, but let's just take a peek real quick at some of the ones I have mapped out here. Let's go look at the Hang Seng. And let's go look at a daily just to see what it did over the course of the day. And let's zoom out here. I mean, that candle, isn't that nuts? One candle erased what looks like almost 3 weeks worth of trading activity. Wow. I mean, that's bad, right? Andre said, yeah, Jim Cramer said it was going to be like the 1987 crash. Thank goodness it wasn't. Yeah, you had some of these markets were also halted. You know, if you look here, the Hang Seng, from its Thursday close to its Friday close, had a 13% down day in one day. All right, and actually in over the weekend. So that's your overall market move there for the Hang Seng. But you look at the Nikkei. I mean, Nikkei also had really bad market day, down 7.8%. So going into it, you know, this is what our markets saw Sunday night as we opened up. They saw international markets tanking like this, and that's one of those pieces that just automatically causes ours to gap down. And from that, I took chances. And I, again, risk on because I think a lot of people shared that same opinion as me, which is we're oversold on this one. Yeah, I do think we got more downside movement overall, but the big painful knee-jerk reaction typically results in a big sharp bounce back up. If you guys watch the TikTok video I put together for Trading Academy, which we just call it market updates, which we produce every morning and get those things cranked out. I said, look, we're down big time. We're down 5.44%. My assumption will be, I'm willing to bet that this is probably going to close in positive territory for the day. And in hindsight, luckily that was all recorded, we're up 0.19% right now on the S&P. That's after being down 5.44%. That's a really crazy turnaround there. So I'm feeling pretty happy about that one. But really, it just jumps into this category. We were seeing risk off. Everyone running from risk assets. Get out of equities. Get out of equities. Panic. Oh, the sky is falling. Which is why I drew this little picture here. I got some guy jumping off a cliff, and it says risk on, right? People willing to take that appetite for risk today. Now, just because I like to entertain you and have fun with it, I did take a prompt in Midjourney, which created this graphic, and I said, risk on with just big capital, all caps, risk on with an exclamation point. And I was curious how AI would perceive that, right? What does that mean? Well, I'm going to show you a couple different graphics here of what it perceived as risk on, just so you guys can be entertained by how AI thinks. This is the one I chose, and I actually added the little green line there. But this is their risk on picture. Not sure what that has to do with risk. This actually, my mom's an old hippie, and was an old hippie. This is something my mom would draw. Nothing to do with risk. And then it drew this one as well, which at least I think had more of a maybe financial theme with a city, but this one's kind of cool. I actually like this as artwork. It's like a collage almost that someone had made. Anyway, I thought you guys might find that somewhat humorous, as I did, looking out. I'm in a lava lamp, right? It did look pretty good. You bought Apple today, Margaret? All right, we'll talk about that. Yeah, Margaret, I think I could sell that last one. I think I could sell this, but I'd want to see the actual elements. Like, it looks like this would be one that somebody made with newspaper. I like it, but again, what does this have to do with risk on, right? Really weird stuff. Gotta love AI. Anyway, I mentioned on Friday's show, there's certain stocks, or I guess one of the questions was, how do we trade this, right? And I said, I think you need to look for companies that you like, that you feel comfortable with, that you don't think are a fly-by-night scam. So I was focusing on NVIDIA on the show on Friday, which I had a bunch of puts, and now I am long NVIDIA. My strike price is 100. So let me just share that with you guys so we can get transparency here. NVDA. It was a great day for NVIDIA. And as it rallied up today, when it was right around 97, I sold a lot of the $100 puts. So I was already in the money, but the premium I collected was $5.85. So I collected $5.85 on a $97 security, which is about 2%. Actually, more than that. I gotta get my percentages correctly here, but just so you guys know, I'm long currently NVIDIA. I sold the $100 calls against my position just to get out at even price if I have to, because who knows if it's going to flounder around down here, what the rest of the week holds. But I also sold a bunch of the $100 strikes, which I will change these numbers here, at least so I can have my strike price on the screen. I know you guys have your strike prices, but let's take that out. So that's where NVIDIA's, it does look like it's following this big, nice downtrend here and going to be going lower and lower, but NVIDIA is one of those ones. I'm fine to own it at 100, and I will continue to load up at 100. And actually, Tesla's another one I'm looking at, but I'm going to wait another couple of weeks here before I do anything with Tesla. I want to see a little bit more of this transpire with what's going on with NVIDIA or Tesla and their fires and all that type of stuff and the angst. Big Eps has added some Bitcoin 89-ish or 98 or 89-ish. Yeah. If you look back out here, there were some other levels right around 90 that I liked. That was that real just gap down here on August 5th, and then we rallied aggressively from it. But, long term, you guys know my take. I'm an AI person. I think AI is absolutely going to change the world. It's not like, we could question in the 90s. I could question the internet. Well, what's it really doing? I can communicate with people, and there really wasn't great shopping back then, but we could have speculated that it would improve shopping experience and things like that. But I think that was a much more risky investment, the internet, than AI. I think we've all seen AI impact not only our personal lives, but see how it's impacting different companies. We're seeing the utilization of AI in almost every search engine now, and all of that needs to be fueled by companies that are selling the technologies for it, which is why NVIDIA to me is a no-brainer, an absolute no-brainer. And you look at their high price, which goes back to the January 7th, at one point today, NVIDIA was down 43% on a company, in my opinion, that is just like one of the biggest names out there doing amazing things. I watch the GTC, the GPU Technology Conference every year just to see what's going on there, and I'm more and more impressed. So again, that's why I decided to just kind of take a risk today. Again, we were only at $97 and I sold the 100 puts. So if price stays exactly where it's at, I'm going to own more NVIDIA, which is fine. We'll keep piling into that position if need be at that $100 strike. And I do expect that we'll see a little bit more of a bounce this week. I think there's going to be a little bit of, I don't want to say the words, but there'll be not a moment of reckoning, but there'll be a little bit of a settlement with what's going on right now in the international markets with regards to tariffs. So let's dive into that talk, which is, of course, tariff talk. Now, we know that this man right here is playing hardball, and there's all kinds of memes, both pro-memes and anti-memes about President Trump and what he's doing, right? Obviously, we know China has come at him with a 34% tariff, and Trump has said if they don't drop that, then by April 8th, which is supposed to be tomorrow or the next day, 8th or 9th, he's going to reciprocate with another 50% tariff. So this little, pardon my French, but pissing match between the two of them could continue to escalate, and that could drain on these markets. However, I'm hearing about several different countries that are already coming to the plate and saying, hey, we're cool to remove these tariffs. And, we talked a lot about this on Friday's show, so I won't dive into it much here. But now it's kind of weighing the pros and cons of each one of these countries stepping up to the plate. I think the more that come up, the more likely this market's going to end up bouncing back up a little bit. And in my assumption, my expectation is really what's happening with this picture here that we've drawn out a couple weeks ago, which is we're now down 20% on the S&P. Right? Let me go and map out from your all-time highs here, right there on the 19th to where we closed at today. We're down 17.75. At one point today, we were down 21.43%. 21.43%. So we're bear market today. Now, I should have brought some graphics. I actually created Midjourney created an amazing bear image. I will use that on tomorrow's show at some point. But bottom line, we did cross into bearish territory. And if you look at what happened back in 2008, and the reason this one's so much clearer to me than what happened in 2020 is I already had a big short position on as the markets fell apart in 2020. In 2008, I was building a position based off 20% decline in the markets. You guys remember that, right? I told you why 20%. That's the bear market signal. Notice we did not close in bear market territory on the S&P today. I do believe that if we get to a point, whether it's this week or next week, that we're down below, and it looks like we're going to close below the 20% mark here, which would be about 490 on the S&P, SPY, I think the Fed's going to cut rates. Now, I don't think they should. I think they should not do it, but the government doesn't want fear any more than we already have, so they'll try to save it from closing below 20%. That's just my take, because I've seen it happen over and over again in my trading career. That 20% is like a sacred line, and they'll try to save it. I was actually waiting today to see some emergency meeting by the Fed, and they were going to cut rates just to keep this market above that 20% mark. Margaret says, when will they cut? Well, the reality, Margaret, is, well, you guys tell me. Hold on. Before I go into this one, I'm going to do a poll, and we're just going to say here, should the Fed cut rates? I'm going to do a poll, so don't type it in the chat yet. Okay? It's a simple yes or no. Do you guys think the Fed should cut rates? And you have to think two different ways here, right? As a consumer, as someone who's invested heavily in the stock market, you have one answer. As an American thinking about the overall economy, I think you have a different answer. I think that there's two different ways of looking at this, and that's the tough part. That's why I put the poll up here for you guys to just kind of get your take on it, because you're going to have this discussion with your friends and family that are into the markets, and you're going to hear a lot more about it. And I think the impact of these decisions is critical. Margaret, you are a Trading Academy graduate, right? We have an XLT general session happening next Friday at 11 a.m. Pacific time. It's going to be Bill Addis, Larry Jacobson, and myself are going to do a talk on, kind of like I would do here. I'm going to kind of be the moderator between Larry, but it's about kind of strategic investing and looking at the long-term perspective and how we would do that. They're going to make an announcement today, I believe. So I just confirmed with Larry we're going to do it. It will be next Friday, and I'll share when we actually get all the time and dates official, but I'm going to say 99.9% official. Bill Addis, Larry, and myself will be doing a presentation for the XLT general session next Friday. So that'll be 11 a.m. Pacific time. Yep. Yeah, I'll let you all know. I'll put the little banner up here for this show. So for those of you who haven't voted yet, get your vote in that survey quick. I want to end it so I can discuss. I got less than half the people here have either clicked yes or no on should the Fed cut rates, right? Hurry up. Get in there. Click a little button, simple yes or no. It doesn't take a lot of work for you guys to vote. Just do it real quick. So as I'm waiting for the last few of you to click on this and give me your opinion whether we should cut rates or not, let's explain it from the two different perspectives. At this point, you should all know because you watch me every day. You know where I'm going to go with this. But number one, if you own stocks, hell yeah, you want them to cut rates. Do a 50 basis point cut, 75, cut, get it to zero. Juice this market with pure financial heroin is really what it would be. Just juice this market, right? But we already have inflation. So on one side, as an investor, for your 401ks, you're rubbing your hands together going, oh, please, pal. I'll give you a kiss on the cheek, buddy. Just cut rates. Juice it. That's selfish. The grand scheme of things is if you cut, inflation's going to surge much more than expected. And right now, everyone's expecting it to go higher. So now you cut rates, you act as a catalyst for higher inflation. That will put a much bigger pressure on the economy going forward because we're going to have slowing growth, higher inflation. Now what? How do you get out of this? So do I want him to cut rates? Yeah, sure. I got long positions. Do it. Should he? Absolutely not. No way should he. And 63% of you said no. At least that's what the numbers were right there. So we shall see. Sometimes the Fed will do things that I don't believe that they should be doing, but they do it anyway. Like we saw when they started their rate cut cycle, 50 basis points. Why? Why would you have to do 50? Start at 25 and test the waters. The good news for what happened in 2008 was the markets were crashing, and we did not have high inflation. So cutting rates, they did a 75 basis point cut pre-market. So in the pre-market session in 2008, in January, a picture looks just like this. We just broke down below that 20% line, and markets were down big time in pre-market, big time. And the Fed stepped up and said, okay, we'll cut 75 basis points, and the market shot back up. It was a big bounce. If you want, I'll see if I can zoom in on that one. Let me see if I can find that specifically here so we can see if there are any parallels to what's going to happen or what may happen for us. So here is... Okay, you guys see right here. This day here, this is the 22nd of January. You go down to where the market had closed to its low point. The market was down 5.26%. Hello, everybody. We were down 5.44%. We were worse than this day. This day right here, I believe it was January 22nd that the Fed cut 75 basis points pre-market to save the market, and it shot this thing back up. It was a big juice in the arm. Well, they also cut rates, I believe, back here on March 17th. And notice why. Because it was down below that 20% mark. And again, I think that's something we're going to all have to keep our eye on is that 20% number. I know it seems silly, but it is a significant piece. And if you ask what the 20% mark is, I just go to the S&P 500 here. Let me just zoom out. Okay, there's the S&P 500. I'll go to the very highest point that I see all time, which is right there. Okay, and that number is 6147. So you just put a calculator on your screen here. You type in 6147, times that by 80%. 4917. That's your number. So we'll put this on the SPX as well. We'll go 49.17. Come on. All right, 4917. And you notice, what did we do today? We broke it, but we did not close below it. So this is a sigh of relief for our markets, right? Sigh of relief for our markets. Who knows what the next rest of this week will hold? It's my belief that if more countries come to the plate and remove the tariffs, that we'll start to see this market rally back up. If China and the U.S. get into this, fist fight where, Donald Trump's throwing a 79-year-old left hook at him, it could get worse. It could certainly get worse, and that's the big concern. Jeff Perry says, odds that the 20% doesn't hold, 50-50. God, Jeff, that's a tough one. I'm not trying to be evasive, Jeff. I know I'll never really dodge a question. But I think that that's an incredibly hard probability. I could make so many arguments on any probability. I don't think it will hold long term. Right? I think it'll hold for like maybe this week or so. I think it'll have a little bit of a bounce, but I think ultimately it's going to be this issue with China and the United States. Forget the UK. I think the European Union may have a little bit to do with this if there's more hardball there. But to me, it's US and China is the piece that's going to be this lasting dark cloud. You might have a couple of spots of sunshine where Vietnam says we're good, or Canada says we're good, or Mexico says we're good. And as Christopher says, China's already said they aren't budging. Exactly. You literally have the two biggest bullies in the schoolyard are now taking their gloves off going, oh yeah? Come on, let's do this. It usually doesn't end well, right? It usually does not end well. So a little nervous about this. I do think that over the next few months, we will break. I do think that the market move that I showed you in 2008 will look similar to this. Okay, so what do we have? We've got this panic sell-off here, which is sharper than what we saw in 2008. This is a much sharper decline, but it bounced at the 20%. I think what you'll get is a rally up. Let's remove that. So let me draw lines here and show you what I think this might look like over the coming weeks. This is, let's do through the end of the year, all right? I'll do this on the SPX because I don't normally look at this one. So this is the chart of our markets right now, and let me map out what I think it might look like for the end of the year, all right? And again, this is opinion, totally speculative. I could be completely wrong. You guys have seen me be wrong many times before, and that's okay. I think you might get something like this. I'm drawing a bunch of clicks on here. And then I think by the time we get into June and July, I think you start to see it break. And I think we'll continue to drift lower, but I don't think it's going to be as sharp. I think along the way, I think you're going to have much more jagged moves than what I'm drawing here. But I do think that you'll see this market continue to drift lower, something like that. Now, again, that is just an opinion, guys. Please don't take it as the gospel and that the markets are going to absolutely crater from here. But really, what positive stuff do we have right now? Right? We don't have a lot of real positive catalysts here. And as I look across the horizon, we've talked about it for months here, and sometimes I feel like I'm being repetitive and boring as a show host. But AI is going to have a big play in this. We're going to have a lot more layoffs. If we do go into recession, more layoffs are happening on a business level. So I do think you'll see bounces. I think you're going to see bounces off this 20% mark. But it'll probably bounce maybe one more time, break it, and then slowly start to drift down. Now, remember what happened back in 2008. We'll do the exact same and see what happened in 2008. Because this is, I think, a much very similar situation. Notice what happened. We fell down to 20% and then we rallied out of it. We fell down to it and then it broke below it. It rallies back up a little bit but can't make a new high. And that's really into September of 2028 is where that market really started to fall sharply. I think that ours will be a little less aggressive. I think you'll look more like this part here where it just kind of can't make a new high, kind of keeps just going low and low and low. Getting tired of all this winning. Hey, you know what, Christopher? I am winning. And you guys should be winning as well. If the market drops, you should be winning. And I'm getting tired of winning, right? We're going to get so tired of winning. I think the perception from the average American consumer and non-trader is winning means that the markets just go up and I make money. you and I have a huge advantage. We can go short. We can win if things are terribly wrong. You know, if you love or hate Trump, doesn't matter. Just play what the market's doing. And right now it's telling you the bias should be to the short side. Now, having said that, I have some long positions right now that I'm getting hurt on. And I need to figure out, well, not figure out, but I think over the next few weeks, I'll have a little more clarity on those positions. I still am bullish Bitcoin, even though my optimism there is fading. We'll talk about Bitcoin here in just a little bit. Nope, no, I didn't hedge. I went long. I went long on NVIDIA. I sold some more puts on NVIDIA, which are in the money at 100. I still have my MicroStrategy. So I sold calls at 3:30 today on MicroStrategy, collected some very nice premium. So I'll make, over 1% for the week, and I'll keep doing that even though it doesn't look great. And then SMCI really rewarded me today. We had a 10% move up in SMCI. I sold $40 strikes against my position today, collected very minimal premium, but still collected some premium, a little less than 1% for the week. So my goal here, even though SMCI looks absolutely terrible, keep collecting 1% per week. If the markets do have a little bit of a rally, I will probably let those expire and take the shares away from me. I don't really want SMCI in my portfolio. I'll be honest. I really don't want SMCI in there. I'm okay with MicroStrategy. But, the stocks I do want to have in my portfolio are going to be NVIDIA. As you can see there, even though that chart looks atrocious, I do think it's going to come into I think Big Eb posted earlier, it's coming down to a normal PE type of ratio. I don't know what their PE ratio is right now. Let me see real quick here. Price to earnings ratio for the trailing 12 months is 34. Good with that. I'm great with that. 34, I'll take NVIDIA 34 PE ratio. That's great. When you're up in the 100 area, that's a little bit sketch. I know, Big Eb. SMCI, trust me. I woke up last night. Sunday night, I was like, oh boy, this is going to be a bad day. SMCI is going to get murdered. And, here it is just being one of the shining stars of the day. Thank goodness. But the goal for me is if the markets do what I anticipate them doing, which I've already spelled out for you, I think we'll have a little bit of a rally. Nothing strong. I think we'll get a little bit of a rally. I think you'll, rally up maybe the next couple days. By the end of the week, it'll probably be a little bit lower. That should get me high enough where I can either get out of those positions at a profit or sell cover calls again next week. So that's pretty much it for me. The thing is, you can't predict anything right now. Exactly. I think the market ends up a dead year, flat at best. I think we're going to be down. I think there's just way too much pressure, Kay, to make a statement that we're going to be unchanged. If you look at the chart here, let me bring up where we opened up January 1st just to give us an idea of, well, I guess you could do it two ways. How would you guys rather do it? This is a matter of personal preference. Would you rather do it from where we closed December 31st of last year or from where we opened this year? It's always a question that's like, I don't know, which one did you do? Typically, I would do it from the close of last year, December 31st. And the reason for that is we would go from December 31st all the way through December 31st, and that would be our year move. So typically, I do the close. So let's go here and show you a horizontal line where we closed last year. That's at 58.81. We're already significantly lower than that level, right? Significantly lower. So I really don't think that we would have to, about 8. I had a couple trades going on. Yeah, I didn't want to have anything as I went to sleep. And I was busy doing other stuff, so I went out to dinner and went to the gym. So if you look at, when did I go to the gym last night? I went to the gym like 8:39. If you look at this chart here, to get all the way back up to 58.81, that means from current levels, we'd have to rally another 16% here. I don't see that happening. I don't see us having another 16% rally here. I do think we'll chip away a little bit over the next couple weeks, but I don't see us getting back up to. So I do think we're going to be down for the year. Now, question came in there. Who had the lowest guess? Well, let's go look at our list here and see who might have had the lowest forecast there. So where did I put that stuff? Daily materials. I got to find my folders that have all this stuff in it. And there's my S&P 500 and Bitcoin price, by the way. So here is your S&P list. Right now we're at 5,062 on the SPX. Oof. We're already, remember, last year 58.81 is what I had to close at. and we are now at 50.62. So right now, Scott Delaney would be your winner, but there's not a lot of people down at that very low end. Scott McCormick called an 18% slide. This Ben Farhad, he said 46.07. However, I'm not going to honor this one, Ben. And the reason is you sent me two numbers. You sent me 46.07, and you also sent me, where was it, Ben? There was another high number here. Your first one that you sent me was 67.33. So that's what I'm going to honor. But, I anticipate us being down this year. I thought we were going to be down about 7% for the year, 54.41. We're already well below that. So, yeah, if it keeps on drifting lower, Scott McCormick could be the winner here. Could be the winner. We shall see. I guess the other one here, and we'll talk about this, I guess now we'll switch over to that discussion. Let me go to my slides because I did have some cool graphics for today. We already talked about emerging markets. We talked about, one other thing. The other piece is Bill Ackman. You guys know Bill Ackman is a notorious, he's just a big-time hedge fund manager. And he called for nuclear economics, like the economics of our markets just kind of nuking things right now. So all I did is create a graphic for this one. I'll maybe look more into what he said, but I thought it was an interesting topic. For him, he'd like a market to tank because then he could buy more at lower prices, just like Warren Buffett would. All right, so let's look at crypto. So I did not think we were going to get back down to a specific level on Bitcoin, and lo and behold, what do? I said we'd never get back down to this level ever again. Well, we literally went all the way to the bottom end of that zone that I've got drawn here. So I've got it full screen. And Big Ed, he's always about headline grabbing comments. Nuclear winter. Yeah, that's it. Nuclear winter. Basically, we're headed in for trouble. Good to see you, Thomasina. So the low point today, 74,434 on Bitcoin. That's brutal. And my zone here, which I had, was 74,479. So technically, we have gone literally to the dead low of that zone, just barely broke it by about $30, and now bounced out of it. Now, I could play the devil's advocate and say, well, we didn't close below that zone. I don't know. To me, touching it is just as bad. So I guess I got to just suck up that lump of being wrong again. I didn't think we'd ever hit this. And the chart doesn't look good. I really am dumbfounded as to why this is not showing legs to the upside. It leads me to believe that this historical 4-year cycle, which I and many others are basing our forecasts off of, may never come to fruition. Now, I don't know what would cause it to have a big upside move. I've been looking at all the data and announcements from our government and president and VP and the SEC, all of which should have had a much bigger move up in Bitcoin. Yet it's been going the opposite direction, which is very concerning. I haven't sold any. I'm not selling it. I'm going to continue to keep all mine. I'm not buying any more crypto at this moment. Putting more to use in the equity markets, which has been better rate of return, obviously, because I'm not shorting cryptocurrencies. So yeah, not looking very good out there today. 78,978 is where it's at right now. I'm bullish. I do think you're going to see bounces here to the upside. You could call that a double bottom if you wanted to, from that March low to your April low. I think you'll probably see more upside movement, but it just doesn't seem to catch a break. It can't seem to continue to move and break new highs. It's trying, but it just hasn't done it. With all that economic stuff political stuff, I imagine this being 120, 130 by now, and we're not there yet. So it's been pretty ugly. Maybe reading too many articles, is that a bad thing? Sava, on what? No, I think reading articles is fine. Just remember, a lot of times those articles are biased. They're pointing to a specific agenda by the writer of those articles. Let's see, what do we got? Just another opinion from someone I don't care to hear about. Oh, Ackman? Yeah. Yeah, he's got billions of dollars under management, right? So Ackman certainly does say things to promote his own agenda. Big Eb says, how do you think the market ends up the next few weeks on earnings? So it's a great question, Big Eb. Unfortunately, the companies that report Friday, Bank of America, I know it's JP Morgan, Wells Fargo. I'll bring up the list here, but the companies that are reporting earnings on Friday are predominantly financials. Now, that's not necessarily a bad thing, but that doesn't give us a sense as to how trade is being impacted. That could have a lot to do with interest rates, which have certainly been very volatile. Here's your list of companies reporting on Friday. JP Morgan, Wells Fargo, Progressive, BlackRock, Bank of New York. So you got a lot of financial firms in there. And then, of course, next week we get a much bigger landslide. In my opinion, if those financial firms report good earnings, it'll be a calming effect on the markets, and it should act as a stabilizer for the panic that's going on. It's like, okay, well, the banks are doing okay. That's a sign the economy is doing better than expected. On the flip side of that, if those banks don't report good numbers, that could add to the fire. So I'm optimistic that banks are going to do okay, that their numbers will come in line with expectations. I probably lowered their forecast in the previous earnings announcement so they can jump over that hurdle. And I think that should stabilize things, which is kind of why I drew out the chart the way I did for the S&P, as I think you're going to see kind of staggered, slightly up and choppy stuff for the next couple weeks based off earnings. I think once we get to the week that has retail sales numbers, that's going to be painful. The other part that's going to be concerning are the next, the 2 weeks that have the FANGs or the Magnificent Seven stocks. If we see numbers from somebody like NVIDIA, and we'll look at when NVIDIA does not report in the next 2 weeks, but they're out on May 28th. So they've got a ways to go till we get to NVIDIA's earnings. But I'm really curious to see what NVIDIA has to say about demand for their processors, right? How is it going? The other big ones are going to be like Microsoft. Right? Microsoft has already said it's pulling the plug on a lot of data centers, which is not good. Their earnings are set for a couple of weeks out to April 29th. You've got Amazon, right? Amazon's going to be in 3 weeks, April 24th. So a lot of these big Magnificent Seven stocks, I think, are more important as to direction of the market. And, do we see in those, and I don't know this, but do we see in those announcements made by their quarterly reports the impact of the tariff situation? Mind you, the tariffs just went into effect on the 2nd, the hardline tariffs. Granted, there were some other tariffs before that, but do we really see the impacts hitting their financials for Q1? I don't know. I really don't know if there's enough lag time for that to impact. I don't believe that there will be. So I think that what's going to happen is the Q1 numbers are actually going to look pretty good. It's the Q2 and 3 and 4 numbers, I think, will really start to feel the brunt of those, not only the tariffs, but also inflationary pressures as a result of those tariffs. So it's going to be a while. Is it Trading Academy Friday show going to tell us what to do or what to buy? No, we can't do that. We're not financial advisors. It's going to be, a lot of macro thinking on the market. So like what's coming for bonds, what's coming for interest rates. I think Larry will probably talk more about strategies and tactics to use in a long-term portfolio, most likely using options and other instruments to help protect a portfolio from downside moves, which is critical in this market environment, I think. And also, how do we not just protect, but grow the accounts using strategic investor strategies. So I think that's what's going to be covering. What else? Earnings may be okay, but their forecasts will be lower. I think so as well, Stephen. I think that everyone's going to lower their forecasts on this next earnings call. I mean, if you put yourself as a CEO of a company or a CFO, everyone's going to take this opportunity to lower forecasts. And here's what I think will happen. I'll just pick NVIDIA, for example. NVIDIA will probably lower their forecast, but they'll also take the opportunity, because the market's in turmoil, to lower it more than expected. So let's say, and again, this is a totally fabricated number, but let's say they expect revenues of $20 billion for the quarter. They'll say next quarter, we're thinking $16 billion. So a drop of $4 billion. Then they'll exceed that number significantly in the next quarter, causing that stock to rally up. So it's that constant manipulation game that goes on with these financial firms. I mean, it's nonstop. Not financial firms, but with publicly traded companies. It's almost nonstop. Awesome, Joe. Yeah, his trading weekly options. Good. I'm glad you're enjoying that one. Colton, like it. Newbie. Welcome, Colton. The market crash was canceled. Well, it's not canceled. It just had a pause, right? We don't know whether this is done or not. Again, I don't think a crash is the right. Well, maybe for the last 4 days, you could argue that's been a market crash. But I do believe that the market will continue to drift lower, which is just an opinion. But I think we're going to have a little bit of a bounce for this week, and optimism But then the war between China and the United States on tariffs will escalate. Earnings will come out a little bit worse. And I think that's where we're headed. Can I look at TQQQ? Oh, boy. You're going leverage, huh? This is the Ultra Pro shares. Triple long, huh? What did you say on there? Looking at TQQQ, currently in supply daily zone. I don't know if I would call TQQQ in a supply zone. I don't think that's a supply zone. I'm not sure what time frame you're looking at there. I'll go to an hourly. I wouldn't call this a supply zone. I mean, you've closed the gap, but I wouldn't definitely not call this a supply zone. And, you know, for TQQQ, remember, this is a leverage instrument based off the QQQs. So you should look at the QQQs first, right? This is what's going to turn, not TQQQ. TQQQ is a result of what happens with triple Qs. Remember, TQQQ is a derivative of the triple Qs, so your analysis should be on the triple Qs. In this case, you know, you could be looking down here and saying, well, did we come into any strong demand zones? No. I mean, there is a little guy right here that's right around the 406 mark, 406 all the way down to, what's the low point there? 402. And we actually were in that one today. So you could have used that tiny little demand zone over here, but other than that, yeah, I wouldn't necessarily say we're in a supply zone at all. TQQ. Oh, okay, hold on. I'm bringing it up here again. I just don't see a. Are we looking at the wrong thing here? Oh, okay. There you go, NJ. I was like, wait a minute. SQQQ. That's totally different. Yeah. Now you're looking at the super triple short. And to that, I would say yes. But remember, this is derived from QQQ. So the question is the QQQ in a demand zone? And I would say, yeah, it is. But it's a very small one that most people probably wouldn't even identify. And it's this. I'll zoom in on it over here on the hard red edge. It's this drop that goes into a hammer formation on January 17th and then ripped out of it. So you have a small little guy right there. That's the most likely what it's reacting to now. But yeah, I would go make sure you do it with the underlier. John says, let's see the VIX. Sure, let's look at the volatility measurements of the day. Bam. We're up to 46.98, and it's a giant red candle. At one point today, VIX was sitting at a measly 60.13. Remember, VIX is high, time to buy. You know, I did not look at this today when I made my trades. Confused on what, Chris? Let me know. Let me know what you're confused on. Yeah, if you look at this typical classification of VIX, anything above 40 technically is supposed to be by the market, but I don't believe that. That's why I don't use VIX. But you know, I bought this market this morning or last night based off of fear. I bought it based off of being overdone. Really strong aggressive move and being very close to lock limit down, which would have been my backstop for that market. So, you know, if you came in this morning and you saw that the VIX was up at 60, you know, that's a pretty good sign based off historical technical analysis that it would have been a buying opportunity in this market. And lo and behold, it ended up being. But as you witness back here, let's say like in 2024, it can continue to go higher. I will tell you the last time I used VIX is back here. It was back in 2020. I decided I'm not going to use it ever again. Because you guys see I've got the two red lines there, the two horizontal red lines. You've got your 20 and 40. And all technical analysis books say with the VIX above 40, that means you're buying. You're looking to buy. Well, if you bought based off of that, look how far and how much it continued to go up. It went from 40 to 50 to 60 to 70 to 80. Peaked out at 85.47. Right? That means that if you bought on, let's just say you bought here when it spiked up to 54, right? You're all looking at this and you're going, yeah, right on. I'm buying when VIX is at 54. That means the markets are in panic. Markets are tanking and I'm going to catch that falling knife. Okay, great. Well, notice it kept on going. It kept continuing to go. And now all of a sudden VIX is at 60 and then 70. And 80. What does that mean? That means markets are dropping like a rock and you're long because VIX told you to buy. So while it does tell you when to buy and sell theoretically, it doesn't always mean it's right. Because if you held this, let's say you bought it 54 on VIX and you held the market, you were probably bankrupt by the time I got up to 80. So be very, very, very careful. Yeah, I don't know, Jeff. I don't trade I don't trade the VIX itself. Never have. It's nice because you get these really big volatile swings in the VIX, and you can have fantastic rates of return, especially like what we had on Thursday and Friday on it. Investco Center, QQQ. Yeah. So the ones we were looking at, Chris, those are triple leverage longs. The TQQQ, SQQQ, those are just, they take the closing price they take the price of the triple Q ETF, and then there's a multiplier effect that they do. They use all kinds of derivatives, and it's not always 3-to-1. I'll give you a real quick example here. Let's go to stock chart. And we'll go there. It's called a perf chart. So you can do a really cool performance chart at this site called stockcharts.com, which I'm a fan of. And here we go. So let's go here. Here's QQQ. There's QQQ. We'll add that one. Let's go. I need to do a perf chart. Okay, so QQQ, and we'll do TQQQ, and we'll do S. So that's the triple short, the triple long, and the regular one, the NASDAQ 100. Okay. So here's the performance of those. And if we go back to, I'm just going to go to the beginning of the year. Let's go back to the January 1st of this year. Roughly right there. Okay, this is pretty much the 1 year. If you look at the QQQs, the QQQ is down 20%. It's down 17.7%. I hope you all can see that. So the triple short, you would say, if you do 17 times 3, that should be about 54%. Well, it's actually more than that. It's at 67%. And you're thinking, well, if the NASDAQ 100 is down 17%, then the triple long should be down about 54%. And it is down 49%. So they don't always line up percentage-wise. And sometimes they can get way out of whack depending on how quickly things move. But that's what those instruments that Chris was asking about represent. Those SQQQ, which is the short one here in yellow or green, whatever color that is. You have the TQQQ, which is in blue. That's your triple long. Or you have just the QQQs. Those other lines are based off of QQQ. Okay? You own TQQQ at $6. Wow. You do? You own the TQQ at $6.71 from when? From 2020? You own triple. I'm confused, Chris, because you've been holding this for 3 years. You're in trouble. Oh, buddy. Oh man, It's actually, that's not good. Watch, I'll show you. Let's go back to see how far back I can go. Let's go back to 2020, right there. So if we look at that, here's where it drives me nuts with these ETFs. So if we go back to roughly 2020, right? I'm going back to January 27th. Yeah, the longer you hold it, the more you lose. So, okay, let's look at the red line here, which is the NASDAQ 100. It shows up 126%. You guys can see that on the screen. It says 126%. That means if you are in TQQQ, you should be up 378%. If you're triple, right? That's what it should be. So right now, they're almost identical. You're only up 126% if you're in the triple long, and you're up 139% if you're in the regular one. So if you just held the triple Qs, you'd actually have a better rate of return than the triple long ETF. Does that make sense? That's just insane. Yeah, you don't want to hold these long term, Chris. These are really bad at decay. Now, if you look at the other side here, you know, the NASDAQ is up 126% over that window of time. The short is down 98%. Ouch. Yeah. Do you get a, yes, you do get a dividend on, you might have to pay, you know, he's triple long, you should get the dividend. So let's go TQQQ. Yeah, here you can see the dividend gets paid. So, you know, we were 19 cents per quarter, 27 cents. So he is getting paid the dividend. But guys, remember this. Leverage ETFs sound great. They were designed not to be long-term investing stuff. They're designed to be active trading vehicles, to use that leverage to capture the moves on big swings. The longer you hold them, you will lose over time. So for example, if the QQQs, and just for the example, if in 2020 the QQQs were $100 and today they're $100, right? You haven't lost anything. But if you were in that triple leverage long, you'd probably be down 30 or 40%. You're like, wait a minute, it didn't go anywhere. Yeah, because of fees and all kinds of other calculation pieces, you'd be losing. Yeah, there is decay with that. So it's based off of the reported price and how things move. If you have a big down day, so let's say something drops 50%. Well, you have to have 100% move to get it all the way back up to break even. When you're using leverage instruments, that's even worse. So it's a decay piece over time. The longer you hold them, the worse they are. I'll do a show in the near future where I really explain more on exactly how that decay happens and what the problems are, but just be very, very careful holding long-term stuff. I mean, even, oil's another big one, natural gas. It's just really, really dangerous holding any leverage instrument. I can't believe you've held that thing for almost 5 years. It's going to continue to eat away at you big time. All right. Well, I'm glad it's working out for you. Merlin, there were 1,164 new lows today, which is more than there were at the bottom of 2019, and there were a huge rally. Could this be similar to that, maintaining a bull market? Well, I think what you're getting is just a panic sell. I think what you're getting is a knee-jerk reaction to the south side because people don't understand what the tariffs are going to do, right? You and I don't understand the full impact. We might understand the intention, but I don't know the ultimate end bottom line. And that uncertainty is what's causing these markets to dump, and institutionally. So, you had a ton of stocks that were down below their 200-period moving average and 50-period moving average, and a lot of stocks hitting, 52-week lows. Do I use that as any sign? I use that as an emotional piece. And if you look at things like Bollinger Bands, and Bollinger Bands are a great tool to help give you an idea as to how painful a market may be or what expectations are. Let's add on Bollinger Bands here. I mean, I get add on Bollinger Bands, or my favorite is stochastics, but I'll use Bollinger Bands just for fun. Look, we've been outside this lower Bollinger Bands, and it's getting super, super wide. I mean, we are outside of our 1, 2, 3 days in a row. Typically what happens when you're really outside for an extended period of time, it'll come right back in and go back to the 20-period moving average. That means on something like SPX, which is completely outside that upper Bollinger Band, that puts your bounce back probably somewhere around 5,400. Well, we're at 5,000 right now. So a 400-point move could happen, and typically on a move down, you're going to see this revert back to this blue line here, which is its 20-period moving average. So, I don't think we'll get to 5,400 on this next bounce. Again, I've got my levels here, which I think will be maybe about the 52, possibly 5,300. But I think you're going to see slight consolidation. Really depends on what the news is. Everybody here can have an opinion, and bottom line is time will tell. The volatility and uncertainty of Trump and these tariffs is really what's going to end up kicking us. But tariffs are different. We may have permanent loss of GDP. We could, but we might get it somewhere else, right? There might be renewed patriotism, and all of a sudden we get more consumption domestically, right? There's that aspect to it as well, which is, hey, yeah, we might get more consumption domestically of U.S.-made products. Time will tell. I don't know. Sure, Aga. We'll go look at gold. So when you talk about risk off, today was risk on. Everyone wanted equities. Well, let's go look at, what do you want? You want gold. Gold is down 2% today. It's really had a pretty horrific 3-day sell-off. Let's get rid of those Bollinger Bands because I think they look terrible. And where's my... There we go. You've had a pretty aggressive 3-day sell-off. I was actually looking at that kind of 3,000 mark as a good logical buy point, and we knifed right through that today. We're at 29.73. That kind of makes you wonder, well, where's the next stopping point? It's probably down around 2,900. So another 70 points lower, which is about 2.5%. Yeah, I mean, just real ugly. These are called 3 black crows, which are a very bearish sign. All right, these are usually black candles, and it's usually a very bullish sign. But again, this is just because everyone dumped risk off assets, meaning bonds and gold, and went into equity markets today. And that's the same thing here with the 10-year yield. I mean, that yield on the 10-year today is one of the largest candles we've seen on this chart. It was a huge move from the lows. From the dead low today to its peak, you had an 8.8% swing in the 10-year yield. We were up almost 20 basis points. I mean, that's huge. Now, look at the picture. We talk about this being a head and shoulders pattern. We get the left shoulder, the head, the right shoulder. This is that retest. Let's see what happens tomorrow. Does it continue to rip up? Then it could negate this whole head and shoulders pattern. But I think it's still in play. This is just a retest. Really shocked to see that much money flowing out of bonds. People dumping bonds and gold today to buy whatever they could in the equity market. That's the move. Jimmy said they want their gold. Yeah, right. Yeah, they've watched that run on the gold market. So that's why, Margaret, it's risk on versus risk off. That's why I had the graphic for today. Right, I had this risk on because everyone went to equities. Everyone, except internationally, rushed to buy stocks, gobble up deals, and I mean, it's incredible how much we moved today. We were down 5.44% on the S&P 500, and we closed in positive territory. That's crazy, right? That's crazy. Just really monstrous move. That momentum is pretty strong. We'll see if that continues over the next couple of days. Let me look at the earnings calendar for tomorrow. I don't even know why. There's nothing. Really, earnings are boring. You might have Tilray report tomorrow and WD-40 to lube up this market. What else did I have? Forex Factory. Let's go look at our Forex calendar here. I don't have it ready, but I will bring it up right now just to see what your economic stuff is cooking for mañana. There are some big announcements, but they're going to happen later in the week, specifically our consumer price index and producer price index. But for tomorrow, if you're trading the New Zealand dollar, you do have a rate announcement. That's going to happen late at night tomorrow. Late tonight. Sorry, let's talk all over again. Late tomorrow night, get all excited over here, you will see a rate cut of 25 basis points on the New Zealand dollar. Again, not the heavy traded currency pair, but if you are trading currencies, that will be one to watch for. Other than that, not a lot happening with the United States. Again, most of our announcements happening on Thursday and Friday with the consumer price index and unemployment claims. So there we go. What'd you say, Chase? Parkcoin and GameStop rally today? Oh, we're great. Yeah, get away from that stuff. I will never forgive myself for closing my short. I'll tell you what right now, forgive yourself. Forgive yourself. I mean, look, you can't think that way, Chris. Here's why. Let's go back to my S&P trade. I mean, I've been telling you how bearish I am on this market. And I had shorted as we came up into this. I was short S&P here, but I can't remember the exact day, but I think it was back on like March 20th. I had shorted the S&P. This green candle here stopped me out on March 24th. Stopped out. As soon as we came back in, I opened a bigger short position on the S&P, directionally with puts. And as it came back down to that demand zone, I thought we were going to have a double bottom and bounce. I closed out my short. I had a nice profit, erased all the losses in the previous short trade, and made a profit. And then the market started to bounce, and I was like, right on, I'm vindicated. I did exactly what I should have done. Well, look what happened. I mean, the markets have absolutely free-fallen. Can you imagine? I mean, and I had a pretty sizable position, and from that point, we've fallen 14.8% in 4 days. I can't think about that trade. You can't think about that trade. Move on, bud. Don't let it get to you. Just look in front of you. The only reason you should look back at past trades or mistrades is just to look and say, what could I have done differently? How could I have improved that situation? And do it unemotionally. If you get hung up on that trade, if I get wrapped up in the fact that I probably would have made about another $25,000 in 4 days just on that one trade, I could get all upset and angry and kick myself. You idiot, Merlin, you stupid. Don't. You've got the rest of your life of trades in front of you. So just look in front of you, just laugh it off and say, what could you have done differently? That's it, right? Just look and say, what you could have done differently. Don't fret on those things. Everything in the past should be a learning experience, nothing that you get upset about. Trust me, I've got some trades in my skeleton closet that would bring tears to everybody in this room's eyes. I can't dwell on those. I can just use them as learning lessons and just move forward. The future is where I make my money, not the past. All right. Yeah, have a drink and move on. Here you go. Sean Reed always said, treat your trade like toilet paper. Once you flush it, it's good. Ooh, I love it. That's a good one. I like that one. Yeah, and sometimes that toilet paper can be pretty bad. All right, guys, that's going to do it for me. Here we are. We reached the 1 hour mark, so I'm going to wrap it up and take the dog, my ailing pup. He's getting worse and worse over here. I'm going to have to take some time off. I hope it doesn't happen. When I do an emergency, I'm taking some time off. You understand what happened. My dog is not doing very good, so unfortunately, I'm going to see if I can drag him around the block. His back hip is just completely malfunctioning. So got some pain meds for him and other things, and hopefully that'll do it better. But I'm going to wrap it up for today. If you guys have something you want me to discuss on tomorrow's show, email me, tradermerlin@gmail.com, or put it down below any of the YouTube videos, and I will get to those on tomorrow's show. Thanks, everybody. Have a fantastic remainder of your day, and good luck out there tomorrow. Be safe.